Good day and welcome. I'm Lori Peterson, sitting in for Donna Cameron. We're part of Mitratech and Continuity's Regulatory Operations Center, and I'm here to talk to you about the federal changes that went on in the financial institution regulatory world in January of 2023. We will start with the Farm Credit Administration. They issued an informational memorandum providing their institutions with guidance on applying accounting standards regarding troubled debt restructuring. And this is to help institutions prepare their financial statements and their call report submissions. The memo also communicated their intent to revise related regulations and call report schedules, and then clarified the agency's interim expectations. So that would be useful when you're, of course, preparing any financial statements or call reports. The Farm Credit Administration also updated its corporate governance exam manual, and they provide information on those exact updates. Moving on to the NCUA, they issued a proposal with comments due at the end of February. They want to amend their rules regarding the purchase of loan participations and the purchase, sale, and pledge of eligible obligations and other loans. So again, those comments are due February 28th. The NCUA also released updated FAQs on CECL, and then they also updated some information on using their simplified CECL tool that was initially introduced in September. The NCUA board, after meeting, announced that the loan interest rate ceiling for loans made by a federal credit union will remain at 18%, and that will remain in effect until September 10th of 2024, when they'll decide at that time whether to extend it or change that. We had a couple of alerts from FinCEN. One was on human smuggling. The other was on potential investments by sanctioned Russians. In each of these alerts, there's always information on reporting suspicious activity. They highlight the typologies and red flags so that institutions know when they need to file suspicious activity reports and comply with their BSA obligations. FinCEN also issued a special measure prohibiting certain transmittals of funds involving BizLotto Limited. Again, this is related to Russian illicit finance. FinCEN also requested comments on the form that would be used by entities to report beneficial ownership information. I know that Donna has talked to you about the different rules that they have proposed, and so this is part of that because they'll need to be collecting that beneficial ownership information. There's also an application form that they're proposing, and that would be used by individuals requesting a FinCEN identifier. And the comments for that are due by March 20th. The CFPB was busy. They updated their mortgage servicing exam procedures, and that covered the tools that were used by mortgage servicers during the COVID-19 emergency. Also, there were some questions about the fees servicers charge borrowers, such as phone pay fees, and misrepresentations related to foreclosures. So they've got their exam procedures updated a bit. The CFPB has also requested information on the consumer credit card market. Those comments are due April 24th of this year, and they are asking about a number of aspects of the entire credit card market and are asking the public for information. They have also issued a circular on what they're calling negative option marketing practices to let companies know that implementing that practice may violate UDAP. This is a situation where maybe you sign up for something and you think you're signing up for something that's easily cancelable, but then you're not sure how to do that. And so the companies are believing that if they don't hear from you, they can continue to charge your credit card and go forward. And so the CFPB is coming out, and the FTC has done similar measures saying that these practices are potentially violations of UDAP. The CFPB is also proposing registries for non-bank institutions to file information with the CFPB, and that information, most of it anyway, would be made public. And comments on that are due March 31st. They're also requiring that certain non-banks file annually with a new registry, about their certain terms and conditions in their contracts. The comments for that are due April 3rd. The CFPB further proposed to amend Regulation Z, and this has been in the news quite a bit, to adjust the safe harbor for credit card fees. They want credit card late fees, they want to lower those to $8 and eliminate the safe harbor for a higher amount. They also want to provide that late fees cannot exceed 25% of the required payment. This is not yet published in the Federal Register, although they have stated that proposed comments would be due April 3rd. The FCC announced limits on the number of calls to residential telephone lines and the opt-out requirements. They reaffirmed those existing requirements. And then effective July 20th, they're also allowing callers the option of obtaining either oral or written consent. There was some confusion as to whether written consent was required, and so the FCC is clarifying that oral consent is also permitted. With regard to unfair, deceptive fees, the trade regulation rule, that comment period was extended. The comments were due February 8th. Also, the FTC issued or amended, its pre-merger rules so that examples in the forms now conform to the new filing fee tiers. There are 6 tiers instead of the 3 that were current. Also, the banking agencies issued a joint statement. So the Fed, the FDIC, and the OCC collectively issued a statement on crypto asset risks to banking organizations. They want to make sure that any of the problems that are going on in the crypto world don't spread to the banking industry. Also, I know that Donna spoke with you last month about the FDIC's proposal to amend its official sign and advertising requirements. They have extended their comment due date. Now comments are due for that, April 7th. And then finally, the Fed has issued a final rule to implement the LIBOR Act that was passed. This is to replace the LIBOR rates that are in contracts currently, the ones that are more difficult to deal with. So they will be replaced with SOFR and some of the other replacement benchmark rates. That will become effective later this month, February 27th, but the LIBOR sunset date is actually June 30th, 2023. I hope you have a good week, and Donna plans to be back with you next month. Take care. Bye.